Hello everybody and welcome back. Well, they say when others are fearful that it may pay to be greedy, and markets are actually acting more technically than some people may think, with key levels hit in the last 24 hours that we've been discussing here for quite some time on the channel. We'll be talking about what's in store for stocks, commodities and cryptos in the next coming weeks into the next 24 hours. And of course, as we know, the spread of fear is everywhere, guys. Stay tuned. There's a lot to go through. See you soon. Well, welcome back everybody to the daily show here where we talk about stocks, commodities and cryptos. This is for the market close 12th of May 2022. And as you can see, it is all about extreme fear. A 6 on the reading. This is the lowest I've seen it in quite some time. And it really does come to roost that idea that we'll be talking about today, including looking through options, detailing how everybody's feeling, to show you that the sentiment is so negative in these markets and that may mean positive things are coming. Remember, when everybody gets trapped into a concept or idea, rallies or relief concepts work out. Doesn't mean that you're wrong in the long term. It just means that right now there might be some pain to go. Let's take a look at the last 24 hours. Apple fell through to a support we talked about. Tesla really fought its way around a very critical support, and some of the big ones were the ones that were taking the biggest dives. And actually it makes sense when we look at it on the charts. What occurred in the morning, we saw that rally followed by a new low. What is this? Potentially a little bit of max pain. And as we saw by the end of the day, what did Wall Street do? They bought it up and they're buying it in the futures right now. What happens at the close is the most important component of the day. Obviously great trades to be had, but at the same time, what happens at the close is important. What was the street buying though? This is where we get some hints and inklings into some of the things that were going on. They were back to buying really high risk stocks. They were buying PBW, bit of a relief there. IBB, biotech, a bit of a relief there. And plenty of other sectors doing okay. Technology actually ended up down 1%. But as I said, it's the mixture of the events. And as we talk about indices later on, we're going to start seeing that there are some potentials here for lows to be formed. Now, speaking about non-recessionary bear markets, obviously many people believe we are in a recession, fair enough, and there are many reasons to say that we could be. Some of the key reasons we discussed though, which is like 50% of all yield curves inverting and some of those other things occurring before, haven't technically happened. And we may have just hit peak inflation, as I've been saying here this week. It looks like that was going to occur, and it still looks like the markets are showing that through these. You may disagree with me, but believe me, when you start seeing some of the things in the markets, you can see things turning around. Now, let's talk about declines that have occurred in the past. Obviously, the average has been on the S&P 500 less than 20%. And where are we right now? Just less than 20%. That's since the 1990s without a bear market. So it's pretty rare to go past 20% and not to have a bear market in the death throes moving forward. And that's something that we will be looking at. The other thing I want to mention is that now that the rate hikes have started from the Fed, they tend to keep going. So I'm guessing they will continue to rise and of course continue to put in these rate hikes, though they may slow them a little bit based on the current volatility in these markets. But remember, when they try to turn the tap off, guys, they're not very successful at doing it. Only 1 in 4 attempts is successful. So let's say that we believe that we're not quite in a recession, and in the future, we see rate hikes continue. Notice what happens when they try to turn the tap off the rate hike. It gets destroyed. So keep that in the back of your mind in the future as well. Some other stats we've been bringing up is obviously the massive sell-off of this market, 6 weeks in a row, statistically unlikely. Remember, it backs in 2011, 2008, 2004 are the last times it occurred. And we noticed that usually in that last week or 2 weeks, we get a little bit of an extra push. We have seen a push down to this 38 kind of 60 zone on the S&P, and obviously the Nasdaq's just continued to get smashed into zones. And we'll look at them a little bit later, but it's statistically unlikely. And a turnaround usually happens after this. Remember, there's only a few where it's gone any further. And thanks very much to Gary, as always, in the community. Discord community links down below for giving us that information. Q1 earnings beat data. Is it good? Yeah, still pretty okay. 70% beats 1374, misses 601. pretty much in line with most times. Obviously, we're looking at forward as well as just the current, so that's why the market's freaking out. But earnings have not been really, I think, the strong catalyst here. The strong catalyst has been the general story, inflation, uncertainty, and there's one thing that markets hate. They hate uncertainty. Uncertainty creates fear. Speaking of fear, we'll bring up the VIX here. If you're not familiar with what that is, it's basically a good example of fear in the markets. And you can see that fear dissipated a little bit over the last couple of days, but in realistic terms, it's hit this big fear marking reading a little bit earlier. So 35 tends to be a big zone, and a spike above 35 shows really sheer capitulation. And of course, if that happens in the future, you expect a very volatile day and new lows to be formed. PCC, put call ratio, we continue to see people just dumping puts into the market. When we take a look at options, you're going to be like, whoa, there's so many sitting for this week and next week. It is crazy how many options are getting into this market. And that to me tells me something that's very interesting. People are fearful, people are trying to short, and why wouldn't they be? The current trend is down. Everybody thinks that this is the Armageddon. And of course, that would mean that it would be a great time to short. Well, stop right there. Maybe not, because we'll take a look at it soon. But yes, up until this point, especially in the last week or two, we've been very short into this point, and we talked about it over the last couple of days. We've shorted that last week of close. We said, okay, that looks absolutely horrible, and it's going to come down to these levels. These make the most sense, and that is where it's come so far. Let's move about copper. So copper, of course, here finding some critical support as well, finding some demand. Very important that copper does this. Obviously, copper is the doctor of the economy. If it's weakening and showing, I guess less demand, we will usually see copper fall through. They trade forward contracts, so that's a huge part of it. And while it doesn't necessarily mean the economy is going to die, because you can see over here, copper went down, it's certainly one of those lead readings that people will be looking at in the markets. The other one is the US 10-year. Now, we mentioned up here that we thought that we might have seen peak inflation. I do have some lead indicators that I teach in the mentoring to round that kind of idea. But I want to go back into just looking at the, let's say, 2 hour here and just having a look at the chart, because I would expect that potentially the US 10-year might rise, and it may even go up to something like maybe a 3% again before potentially declining. And what this has done is it's led to Treasuries also increasing. And remember, that's technically a positive thing in the markets. Treasuries here increasing. You'll notice the previous level of demand over here, support. And what's happened is the market has bulled off that zone for now. Now, you would say, is this technically in a downward trend still? Yes, it hasn't really done a change of trend yet, but I am just telling you that I think peak inflation could be in. And remember, there are certain things that people do in the markets in terms of legs. So if you create the leg here, remember the first move down. Okay, makes sense. What if we grab that from the resistance? Remember, this is a false Max Payne style breakout that occurs here. Look at that, perfect. So then if we took the distance from here to the top, and then we extrapolated that out from the low, well, look at this, comes straight back into that previous resistance support zone. So the markets are kind of giving us this idea that maybe things are starting to switch. You can probably see it on the chart here. It makes some sense, yeah? You look at it and go, is that some kind of Elliott wave or something? Well, it could be. I don't follow that theory so much here on the channel, but I do like the idea of synergies in markets. And of course, every concept out there does have merit, whether it's Wyckoff, whether it's obviously price action, whether it's supply demand, whether it's any of these things. If you understand a lot of them, and then you can start to bring them together, you can see when things make a lot of sense. Speaking of that, we haven't bet against the DXY yet, but of course we have been looking at this key level here. We've got a new level moving forward, but I do want to talk about what the dollar index is doing. So it continues to bull here. That is, money is still going into cash, and cash still theoretically looks like king. And we haven't seen the real change of trends occur. We were talking about needing a bit more. We haven't had it, but I've got some key levels to be watching in the future. So one of the key levels is going to be moving around this box in here, which is around 104.30. And then the big one, I think, is really going to be around this 103 kind of, probably 103.40, 37. If we breach through that, let's say we do something like this, I expect us to pull back initially and then potentially dump. I think this is a big zone here for the dollar moving forward. If it takes out that, I have a feeling that this could have been a false trap to the upside. So be careful here on dollar. Yes, it's bullish. Yes, go with the trend. The trend is your friend, all of those sayings. However, at this stage, I'm not convinced by the move because of what we're seeing on some of the other markets. Let's talk about gold. It's coming into, I guess, a little bit of an area of potential movement, potential structure to go towards the bull side. It's not there yet, but gold could be a good one in the future. I know it looks horror show right now, and it is. We will come back to this. So right now, gold is still theoretically weak, and we haven't seen any breaches of previous kind of supply peaks. We just have not seen that. So therefore, we can't really say much about this market. At least we need it through here before we can start to say, all right, it's rebuilding, and we'll look at that together. Natural gas is another one that a lot of people were very bullish on, and it's kind of had this massive tendency to have blow-offs over the years, that is, find weakness. I do think that it will continue to bull up here. I have a feeling like around this 818, so 8.18, we're going to have some form of resistance, so be careful here on natural gas. I could see it shorting somewhere in this zone, and that's just because we've had that huge blow off, and then it usually bounces, finds weakness, and comes back down to test. Just be very, very careful here on natural gas. A wild trade over the last 24 hours and few weeks. Let's move over to some stocks now before we talk about indices and cryptos. And we'll begin here with Tesla. So Tesla gaps down and then rallies to close it and holds the 700. A fairly big deal for Tesla traders. Of course, a big zone here. Previous huge buy demand, and it's come back down there again. Now, a break and close underneath this will probably be bad for everything in the markets. And I think when you're starting to frame it here a little bit, you're starting to say, well, what do we need to see from Tesla? Well, it's less so what I need to see from Tesla and more what I need to see from the S&P 500. But Tesla actually is showing more weakness than you would expect in a market like this. I would like to see it basically breach through here and then get through that 750 again. And that will then allow us to see one pullback that hopefully leads into us going back and testing around this 810. The 810 area, I think, is a big zone here for Tesla. So if you're a day trader, if you're looking at it, I would say somewhere around that 800 to 810 is a huge zone moving forward. And we're looking for some structural base like that to occur. But really, it's about the S&P 500 more than anything else. Apple, boom, straight into the bottom of the box range, creates a long leg doji. Obviously, there's huge volume. Look at that volume. Whoa, big. So there's a lot of transactions, a huge amount of equilibrium here in the markets. And this means something pretty huge. We do not want that taken out because that would be pretty bad. And we've come into a point of where we expect Apple to shake hands with a lot of people. That is demand. So let's go down to, again, the 1 hour. Check it out. Okay, things are changing up here a little bit as well. So we go into these time frames. We'd like to see that snapped. So basically the market to come up, take out that resistance, pull back a little bit, and then rally forward. That's a good plan and a good concept on Apple. No, we don't want it underneath these lows. And if it does, at that point, you're really hoping it then snaps this one. So just remember, at this point, we are in a zone of support. So that's good. It's actually almost a tick for the biggest stock in the market that it's come back into a zone that we were theorizing only a few days ago was probably going to occur. Let's move over to IWM. So this is where things get a little bit more interesting. So let's take a look here at IWM and think about where it's come down to. So I noticed there was a gap in here, and I thought maybe we'll kind of tap into that gap because this is formed back in November of 2020, and it still could be tapped, but we do have resistances, and of course we've got that potential of a pretty big zone. If you notice where it's come back to, it's hit this area and it's trying to recover. So for bulls, it's the first time in a while they can say, well, you know what, I'm looking at this zone and I like what I see and I'm going to have a go at it. Some people do have a go at it here. Bears are probably taking profit. Bears are saying, you know what, maybe this is a little bit too rich. To short through this zone would be difficult without a bounce. You know, they expect something like this to occur and then they go, haha, look at that, we got it back down. That's the normal ebbs and flows of markets, yeah? So again, it makes some sense. We move over here to the Nasdaq, 50% fib pullback. Where did it go to? Hit the 50%, hit that area that we had boxed up in the last couple of days of trade. So we've obviously had that for a little while here. And we think about the movements. Again, one movement down, second movement down. If the market's going to work like this, what about a movement up? Where would that push us? Well, that would push us here actually pretty high. And you might think, well, shouldn't we short off here? Certainly 13,000 is going to be a big point. But if it is going to rally, and this is a big if, this is a point there it could do so. And you're starting to say, well, can I structure? Can I see change of trends? And you're pretty early. I mean, in this case, you haven't even seen it break any resistances yet. So yeah, something like this, obviously lows, we'd like to see those broken, comes back down, retests, goes up here, tests that area, about that 12.4. This is the theory for the bull. The bear just goes, stuff you guys. So it's going to be a bit of a fight here. You would think in the next 24 hours, probably around 12,100, 100 in general. I think that's going to be a fairly big zone. I wouldn't be surprised to see the market kind of floating around that area. You've also got the 1 hour 20 sitting around there as well. So all of these reasons could push us into this level. Then we see the real fight between the bulls and the bears, and hopefully we see some decision made this week to allow us to make some better informed decisions over the next couple of weeks as well. S&P 500, you'll notice the zone it's come back down to, bounced. Actually, it was almost ticker perfect. Check out that. Whew, that's close. So that 38.50 is the low. Obviously, it's gone down to like a 38.60-ish. It's bounced through and it's done something very, very similar. So I'll take us over to futures here. Just have a look at the futures. And what I wanted to show was just the volume profile tool. So obviously, a lot of you use this tool. But what the volume profile can help you do is help you find these middle zones. So you can, when you're over here and you're looking at this side here, you'll notice there's a big line through 39.22, and there's a lot of action, which you can tell in the charts, that goes on through here. So because there's a lot of action through here, if the market's free falling into a zone, this is where you expect the market to try to find some structure. So a good way of doing it in the past is to load that up, to have a look, and then to load that structure onto the chart. So again, here we go to the volume profile tool, and you'll notice there's quite a lot of action through that 4,200. So that might be an area you're looking for, or right up here at that 4,300, and you price that up. So volume profile can help you there. Let's move over to what's actually occurring. And that's especially if you don't know how to find your zones. What's actually occurring here on the smaller time frame. So you'll notice it's bulling a little bit here, and it's going to test this 39.63 high that it formed in the last trade. This is the futures. So effectively, we breach through this. Where's the next zone? Well, the next zone becomes more than likely up here around 4,040. So that becomes the next area. So you could see the market kind of doing this. And if that's what the market's going to do, then if it breaches through here, are we home stretched? Well, we're certainly looking very, very good. So the first changes of trend are starting to potentially occur here. Remember, previously we haven't had this. The market has continued to show weakness on the way down. This could be our first strength. And last night in the trade here, in the last session, we have some max pain concepts as well. But I want to bring something on top of it. Options. Let's talk about options. What is going on here, guys? Look at these options. Look at these puts. Still lots of calls this week. But look at those puts, 380, boom, puts everywhere. We've been talking about that. Huge amounts of puts sitting around the 385, 380, 390. So a lot there. But I think where things get even more crazy is when we look to the big 3-week expiry. Check out the 20th. There's some big ones here. Wow, they are huge. Okay, they're big. They're big. There's a lot of open interest here on these strikes. And they're all actually sitting, a lot of them are sitting above current price. So we've got 400, 380, 390, 386. These are hundreds, thousands units open. So there's a lot of puts sitting there. And this is reminiscent of what we saw in March. So with the markets coming back down and the way they've come back down, remember we've already done the leg pull on the the Nasdaq. Let's do it on the S&P 500. So top to bottom, where do we expect potentially the market to go to? Oh, sorry, 1 second. Top to bottom there we go, there's the swing, and then we pull that through. Well, of course it's coming into this zone, so a little bit of extra sauce on it makes some sense. We take the last swing because you want the swing high to swing low in this case, and that will push you back into around that 4,300. So again, it's making sense, it's proofing to a degree with technical levels, and I think that's pretty important. I want to bring this type of stuff into the analysis as much as we can. So of course, if you enjoy this stuff, let me know in the comment section down below, and Also, of course, consider subscribing if you can. Now, move over to Bitcoin. What's going on there? Well, Bitcoin's wild. It actually just blew through demand. It blew through the support, just went, yo, we're going to get that. And that's because of the lunar flash crash. For anyone not familiar, my goodness, look at this thing. Absolute disaster. It's pretty sad because people lost a lot of money, and I never liked that. It reminds me of Bitcoin Next many years ago, if anyone was around during Carlos and Bitcoin Next. Poor guy, he wasn't even part of it really. He was just a spokesperson, but he got smoked for it. And look, Bitcoin is the whole crypto market. It looks to be in a winter. I know it will rally. It always does. And the crypto market, you can't call it out. But at times like this, what happens is obviously all the money goes into Bitcoin, into Ethereum. They're the first two that bounce, and the rest of these alts, they're all kind of dead in the water for a while until you get the faith back. And crypto winters we've talked about can last for some time. So unfortunately, crypto, even with rallies in markets, could be even heading into some of these areas down here, which forces you into something like a 23 or even a underneath 20, like an 18 or 19K. So I think there'll be some kind of relief before that. Watch out for around that 34.4 zone, possibly even higher, and it might even come back to 40 before dropping back down. But yeah, crypto market's very hard to call at this stage. Bitcoin shorts is dropping, so that's good news. That obviously allows that relief to occur. But we will dive into crypto a little bit more once we see some clarity in the stock markets. If you haven't already, come and follow us over at FX Evolution on Twitter. It does help us out. And of course, we do post there a whole bunch of stuff. We'll be posting even more over the next coming weeks as we start to see these potential bottoms play out. If you're a bear, I don't blame you. Of course, we are close to, some serious levels, but you can probably also tell that if you're a bear, this market's run very quickly down. So usually there's form of relief before the next move. Thanks so much for watching. Consider subscribing. Smash that like button, guys. We'll see you in the next one. Thanks very much.